Let's have a conversation around bad credit business loan options. How to get a business loan with poor credit. Do not go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka. Let's roll. Today I want to talk to you about how to get a business loan with poor credit. I'm giving you the 10 steps that you need to get a business loan with poor credit. Nothing more, nothing less. Let's start. Number one, you have to know your personal credit score. It's very important. Remember that you have a distinction here between personal credit score and business credit score. So you got to know which is yours before you even get out there to try to look for funding. Since both scores can influence your ability to acquire funding for your business, you need to know your credit score before applying for a loan. Number two, understand why credit score matters. Now, I'm not talking here about credit scores in the personal realm. I'm talking about the business realm here. Credit scores are very important for a business, for a lender rather, to evaluate the creditworthiness of a business. Same thing, they use the same process when it comes to evaluating rather individuals. But when it comes to businesses, things get a little more complicated because a lender has to not only assess the creditworthiness of the owner, but also of the business itself. So you're talking here about two separate entities here. And when it comes to FICO credit scores, you have exceptional is anything above 800. Very good is 740 to 799. Good is 670 to 739. Fair is 580 to 669. And poor is 300 to 579. So the term bad credit usually refers to a FICO score of 300 to 629. Number three, you want to research your options based on eligibility requirements. So for each type of financing, there are specific requirements you'll have to meet to get approved. So traditional business loans are often based on the following factors. There are only three, and you want to be really, really careful. You want to review those three before you even reach out to a lender. Number one, your personal credit score. The second is years in business. Third, annual revenue. So research the requirements for each type of small business financing you're considering to kind of figure out which bad credit small business loans give you the best odds for approval. Number four, you want to choose the best option for your business, right? Because when it comes to financing, there is a variety of financing options available out there. Your choice here is to find out what kind of financing meets the operational needs of your company. When exploring alternative financing options, consider not only the eligibility requirements and repayment terms, but also the lender's reputation. Very, very important. You want to read borrower reviews and speak with service representatives. You can go to Trustpilot and the Better Business Bureau. Those are two great platforms where you can get more information. Trustpilot and the Better Business Bureau. Make sure that your lender is committed to supporting you in your journey to greater success, and that lender has a proven track record of satisfied customers. Next thing you need to do is you need to know the various types of bad credit business loans available out there. There are a few of them, but there are 5 key ones that you need to be aware of. So you have the short-term loans, right? This is a lump sum of capital that the borrower agrees to pay back over a fixed amount of time on a specific payment schedule. Then you have a short-term business line of credit, kind of works the same way as individual lines of credit. Then you have a collateralized loan. This is where you are pledging collateral. So if you secure your bad credit business loan with collateral, you're giving the lender the right to seize collateral to recover their losses if you're not able to pay your loan back. And when you hear the term secured business loan or collateralized loan, they mean the same thing. And they are usually secured with invoice or equipment financing. You also have a merchant cash advance. So if you are a small business owner in need of quick capital, a merchant cash advance offers a lump sum loan in exchange for a percentage of future credit and debit card receivables. And then you have the fifth category here is working capital loans. So these are kind of used to finance everyday business operations like wages, inventory, taxes, and a variety of other costs that keep your business going day to day. That's why they're called working capital. So unlike some other types of loans, they are not used to pay for investing or other long-term assets. All right. One thing you need to be very careful here, and that's the next step. You need to find the best bad credit business loans for your business. And there is a wide catalog of factors you need to pay attention to determine your eligibility for a loan. Let me give you a few benchmarks that may contribute to your loan approval. So, new business. If you're a new business, if you have been in business for less than a year, it may be hard to find a loan even if you have good credit. Potential financing options include startup financing, secured personal credit cards, and business credit cards. For owners with a credit score under 550, if you have a credit score between 500 and 550, you might find it very hard to apply for certain types of loans. However, if your business is doing great, alternative lenders may use factors other than your credit score to determine your eligibility. If you are an owner with a credit score over 500, you could qualify for a short-term loan or even a medium-term loan if your business is doing well. If you are an owner with a credit score over 600, that's even wonderful. You might even be able to qualify for a small business administration loan. If your credit score is over 700, you're likely in a good position to qualify with most lenders, including direct and alternative lenders, as well as the Small Business Administration. Another cool thing is that if you are a business with large unpaid invoices, you might actually turn those unpaid customer invoices into instant capital. You also have, if you are a business with new equipment needs, you can actually qualify for equipment leasing or financing. If you are a very small business, let's say you are building a business, you are a startup, consider financing options such as business credit cards, secured personal credit cards, and startup financing. Another thing you need to do when funding, if your goal is to find the best bad credit business loans out there for your business, you want to compare options to determine the best loan for your needs. So you got to think about three things. There are many options, but three things are kind of important. Short-term versus mid-term repayment. Short-term means the loan must be repaid within 1 to 3 years, and a mid-term loan usually has a 2 to 5 year repayment period. You also have to think about interest and fees on open balances, and you got to also think about the loan limits. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are actually having a conversation here around the bad credit business loan options. How do you get a business loan if you have poor credit? And here by poor credit, I'm talking about your poor credit, your personal poor credit, or the business's poor credit. Number 7, you want to improve your chances of obtaining business loans for bad credit. And there are 2 ways to do this. If you want to improve your chances of getting a good loan, you have to either provide collateral or use a co-signer. Either way, what you're trying to do here is that you are reassuring the lender that push come to shove, you will be able to repay the loan, either because they can seize the collateral and sell it and monetize it and trying to get back their funds, or have the co-signer vouch for you. Either way, the lender will look at your application more favorably if you go that way. So provide collateral. So remember that lending money to a small business is risky. Even for an extremely qualified borrower, an unexpected downturn in business can leave the owner unable to repay a loan. So one way to increase your chances of getting funding is to provide collateral. So there are 2 options here. You can have invoice financing. So let's say you have unpaid client invoices. So the lender may be willing to approve your loan based mainly on the value of your invoices. So with that kind of, when you have invoice financing, the unpaid invoices serve as collateral for your loan. And then you have equipment financing. So if your goal for taking out a loan is to secure funding for new equipment, you may consider applying for equipment financing. So the equipment you finance will serve as collateral for your loan. And if you default on your loan, the lending company will seize, as I said earlier, they will seize the equipment to recover their losses. You can also use a cosigner. So another person agrees to take on partial responsibility for a small business loan by co-signing the agreement. So a cosigner, and this is very important, I want you to pay attention here. A cosigner is typically an individual with a favorable credit score or a steady source of income who can handle making loan payments if the primary borrower becomes unable to. So a cosigner is also liable if the primary signer, the primary borrower, cannot pay. The cosigner has to pay. Number 8, you need to learn how to impress lenders on a small and medium-sized business loan application. This is important. And I don't care whether you have poor credit or stellar credit, or your business has bad credit, or you personally have wonderful credit. You got to know how to impress a lender on a loan application. There are a lot of stuff that lenders look at, not just your credit score. They look at the business, how long the business has been in how long the company has been in business, what kind of sector you're in, trends in the economy, as well as other things. Let's just get right into them. First, your annual revenue. So the business's annual revenue is one of the most important eligibility factors for bad credit small business loans. So if you are approved for a loan, the amount you'll qualify for will usually be around 8 to 12% of your business's annual revenue. Then you got to think about the profitability. So even if your annual revenue is high, a lender might want to know if your business is profitable, right? Remember, because there is a big difference between revenue and income, revenue and profit. So your business doesn't necessarily have to be profitable in order to qualify for a loan, but your chances of approval could be increased if it is. The lender will also look at your current debt obligation, how many outstanding loans you currently have, and also your cash flow. So your ability to manage the cash flow of your business may be an important factor to lenders. Your credit history. So most lenders will examine your credit report to determine if you've ever had a bankruptcy. That's what they care about a lot. The bankruptcy, foreclosure, or another red flag. Remember, poor credit does not automatically disqualify you from getting the money your business needs, especially if you go to a reputable alternative lender. You also have to think about the business plan. So if you want to impress a lender on a small and medium-sized business loan application, you want to have a business plan. And the business plan must be filled with very important elements. For example, unique value propositions, marketing strategies, the leadership team, revenue and profit models, and preferably over 3, 6 months, 9 months, 12 months, and second, third, and fourth, and fifth year. And make sure that your business plan is presented in concise yet detailed terms that clearly explain the amount of funding you need and why it's required. Number 9, you also want to think about other key factors when applying for a small business loan. What are those factors? There are several of them. You have to understand that there is a relationship of personal credit to business loan approval. If you are a small business owner, that means that your personal FICO score plays a big role in whether or not your business loan application is approved. You also have to understand that there is a relationship between credit scores and interest rates. So the higher, there is an inverse relationship. So the higher your credit score, the lower the interest rate that the lender will give you. That makes sense, right? Because you are creditworthy. So the more creditworthy you are, the lower the APR that you are getting. You also have to think about online lenders versus traditional banks. So traditional lenders like banks and credit unions tend to have strict policies and eligibility requirements for loan approval. So they also tend to be slower and require more documentation. So whether you have above average or less than stellar credit, here are a few benefits of alternative and online lenders compared to traditional lenders. So you have faster turnaround times, less documentation required for approval, faster access to funds if approved, flexible terms that meet your specific needs as a borrower, and higher approval rates. You also have to think about the age of the business. Age of the business is very important because a lender wants to make sure the business has been operating for a while to have an operational history. And that's the age of the business is important also because if you don't qualify for a traditional business loan with poor credit, you can go for business credit cards, and you can also apply for a secured personal credit card. I also want you to think about business loan cost. There is a wide catalog, there's a wide gamut of fees that are attached to a small business loan, particularly when we're talking about poor credit. So you have the annual percentage rate, the APR, the down payment, the factor rate. This is typically used for merchant cash advances, and a factor rate determines how much interest a borrower will owe. You also have to think about the origination fee, the underwriting fees, closing cost, and other fees. Now, other fees might include things like check processing fees, prepayment fees, and late payment penalties. And number 10 here, folks, we're talking about how to get a business loan with poor credit. And I've given you a number of steps, and here is the last steps. You need to plan to get a better business loan in the future. Of course, this conversation revolved around getting a business loan with poor credit. I already said it. But that's not the idea. This is not the vision. This is not the mission. The mission is that you are going to turn things around fast and get into the green zone, get into the better zone, so that you're able to have access to a normal, quote unquote, a normal business loan. So to do that, you need to improve your personal credit. You need to establish and build business credit. You need to evaluate your business plan. You need to prove your creditworthiness. And you got to be very creative with funding options, especially if the sector you're in, if the industry you're in is kind of going down right now, if the trends are downward, then you want to look for alternative funding options. And one thing that comes to mind is those crowdfunding platforms. I'm talking here about GoFundMe, Kickstarter, or Indiegogo. Those are kind of cool because they allow you to tap into a new, quote unquote, a new base of lenders, right? You're talking about the crowd, individuals, not traditional institutions. You can also ask family members, right? Who cares? I mean, if you need the cash for the business, reach out to your family members. You can reach out to friends, family members, or even colleagues. And that's the goal here. And one thing I also want to say is that if you want to improve your personal credit, you have to always make payments on time. Try to keep balances below 30% of your total credit limits. That's what specialists call your credit utilization rate, your CUR. It must be below 30%. And don't open too many lines of credits at once. And you want to constantly monitor your credit score and dispute suspicious or false activity. Now, the three major credit bureaus in the United States are TransUnion, Equifax, and Experian. All right, folks. So this is it today. I was just having a conversation with you around how to get a business loan with poor credit. If you enjoy this kind of content, please consider subscribing to our channel and turn on the notification bell so you can be informed in real time whenever we drop a new show. And we drop this kind of shows, guess what? Every single day, rain or shine. So here are the 10 steps you got to follow if you want to get a business loan with poor credit. Number 1, know your personal credit score. 2, understand why your credit score matters. 3, research your options based on eligibility requirements. 4, choose the best options for your business. 5, know the different types of bad credit business loans. 6, find the best bad credit business loans for your business. 7. Improve your chances of obtaining business loans for bad credits. 8. Learn how to impress lenders on a small business loan application. 9. Consider those key factors when applying for a small business loan. And number 10, plan to get a better business loan in the future. I will see you next time, but until then, remember, stay marvelous.